Hi, this is Kirubakaran Rajendran. Welcome to another video with Groww. Basically, every trader faces one issue. So, for an example, if you have taken a trade and you see that by morning it is at a profit of 10,000, and by 12 o'clock you see it is a profit of around 15,000, and by 1:30 you see the profit almost hits 20,000. Then you are so happy that no, you're almost going to make more than 20,000 profits by day end. But post 2 o'clock, suddenly if market reverses and no, it starts going against you, then you would literally see your 20,000 profits going away from you. And by end of the day, it could close anywhere around no 5,000 profits or 2,000 profits. So you're literally losing from 20,000 profits, it is coming down to almost 2,000 profits. So you are literally leaving away most of the profits. So the only way to lock certain profits is to use trailing stop loss methods. Stop loss is fine for initial risk. Trailing stop loss is there to protect your profits. So in this video, we'll see what are some of the important trailing stop loss techniques that you can apply so that you can lock most of the profits. So first we'll see how to use trailing stop loss for your buy positions. See, the moment you enter a buy position, what happens is you go long, and after you went long, the market keeps moving in your direction. And as long as market keeps moving in your direction, you need to keep locking your stop losses. You need to keep trailing your stop losses. So those red marks that you are seeing is nothing but those swing low levels. As long as market keeps moving up, just mark the previous swing low levels. And the moment it goes below those swing low moment, you are going to exit it. So in this example, that is what it has happened. So the market kept on climbing up and you kept on marking previous swing low level as your trailing stop loss. And finally, the moment it closed below the previous swing low level, we just exited it. Similarly, while going short, we just use previous swing high as our trailing stop losses. So in this example, you could see a stock going down in a downtrend. So you would have shorted the stock in the beginning, and as long as it keeps going down, you just mark the previous swing high levels. So those black color mark that you are seeing is nothing but previous swing high levels. And finally, the moment it closes above the previous recent swing high levels, you just have to exit from the short position. So whatever you are going long or you are going short, just check what are the swing levels. So if you're going long, just record what was the last swing low and just exit when that is crossed. If you're going short, just check what was the previous swing high level. If that is crossed, you just exit from it. So this is one simple mechanism you can use as a trailing stop loss method. So now let's take some example of any of the stock and we'll see how you can practically implement this swing high or swing low method as your stop loss with Groww. So the chart that you see is Adani Green. So consider for an example that you bought Adani on 17th of August in the morning. Say suppose you do some analysis and you say, okay, let's buy Adani Green at say around 940 levels, and you bought this level and you're keeping previous days close price as your stop loss. So the previous day it closed around 930, so you are entering at 940 and thinking that okay, let me keep 930 as stop loss. And to your luck, the overall market was bullish and the Adani Green started moving up, and currently it is trading around almost 1000 rupees. So you entered at 940 and currently it is trading at around 1000. So as long as the Adani moves up, as per our logic, we have to use previous swing lows your stop loss. So the moment it crossed this level and it started breaking out from here, we should have used the previous swing low, which is this zone, as our stop loss. So we will be using approximately around this level, which is 965 as our previous swing lows your stop loss. Then market moved up and then it started going down again, and again it created a new swing low, so which is this level. So again this level will be our new trailing stop loss. So initially our trailing stop loss was here 930, and market started moving up and then it created a swing low here and again moved up. So once it broken up and started moving up, then we will change our stop loss from 930, then we'll be changing it to 965. So in this case you are locking your profits, and from there market moved up almost till 1030 and again retraced back and created a new swing low and again moved up. So this new swing low, which is approximately around 985 is our new stop loss. So as long as now market keeps moving up, you create a new swing low, and that is how you have to keep trailing your stop loss. So in this case, from 930 initial stop loss, our new stop loss is almost around 985. So the moment it goes below this level, we will exit it. So we are locking our profits. So this is how you need to trail your profits. So let's see how you can manually place this order with respect to Groww. So you have bought the stock already. So now you don't want to sit in front of a system and keep checking the stop loss. So what you can do is you can simply create a GTT order, which is nothing but you just place a stop loss order. So how I'm doing it is, say suppose you have 10 quantities which you have bought. So now you just select sell and then you click this filter here and select GTT order and then click continue. So now our new trailing stop loss is 985, right? So click 98, no, mention 985. So now it will, the moment you mention 985, it will automatically sell it. But here, since I don't have any shares available, it is just showing that 0 shares are available. In case if you have it, you just mention this and click on sell. That's all. Your order will be valid, and the moment it goes below that level, it will automatically send an exit order. So you don't need to sit in front of a system and monitor the overall stock price. So now let's move on to another technique. So this trailing stop loss method is not going to be focused on charts. Instead, it is going to be focused on levels, just price alone. So just monitoring the price alone, how you can trial the trailing stop loss. So in this method, what happens is, whenever you keep a trailing stop loss at X%, so as long as market moves in your direction, you modify the stop loss to break even, and from there you log the profit. So let me explain how this can be done with an example. So let's consider this. Say suppose you have entered around 2000 levels, so I mean 20,000 levels at Nifty. So consider currently Nifty is at 20,000 levels, you have entered into it and you have kept 200 points your stop loss. So the moment Nifty goes below 19,800, you are going to exit it. So this is your overall initial risk. Now if Nifty keeps moving in your favor, how do you trial the stop loss? So for every particular risk, your overall risk is 200 points, right? So for every 200 points market moves in your favor, you have to move your stop loss 200 points. That's all. So currently from entry price of 2000 to 20,000 levels, if market moved to 200 levels, 20,200 levels. So in this case, what happens is, your initial risk was 200. Now your profit is almost equal to your initial risk, which is 200. So now we have to change your stop loss. So from 19,800, your new stop loss will be changed to 20,000. So you keep adding another 200 points here to your stop loss. You just move stop loss to your break even now. So now what happens, even if market reverses, you are not going to exit at a loss. You are just going to exit at a break even. So now consider again from here, market moves another 200 points. So from 20,000 levels, it moved to 20,400 levels. So now what you do, again you add 200 points more to your stop loss. So what happens, from 20,000 level of the break even level of stop loss, now you move to 20,200 level. So now you are entering from break even zone to protecting the profit zone. So you are almost certain that you are going to get 200 points in profits. So now even if market reverses from here, you are not going to lose money, you are going to gain money. So that is why using a trailing stop loss greatly helps, not only in order to protect your overall risk, not only in order to reduce your overall risk, it also helps you to protect the overall profits. So as long as for every 200 points move, you just keep changing the stop loss. So the new stop loss keeps going up and going up. So this is how you need to protect your stop loss by using this trailing stop loss method. So another most simplified example. Okay, I don't want to manually check what is going to be the new trailing stop loss. I want most simplest method. In that case, you can simply use this specific indicator, which is directly going to tell you not only when to buy and when to sell. It is also going to tell you when to exit once the trailing stop loss level is hit. So it will automatically plot the trailing stop loss level if the market keeps moving in your direction. So let's see what that indicator is and how to use that. So the easiest way to identify the overall trailing stop loss is to use super trend indicator. You just go to indicator and type super trend here, and that will automatically plot the super trend values. And I did not change any parameters. The default parameter is 10,3. So as you could see, this is the parameter which I have used. I did not change anything. which will automatically plot the trailing stop loss for you. So in this example, now you have seen that it given you buy signal here in the morning of 18th of August around 9:48. It gave you buy signal, and as the market keeps moving up and as it started making profits, the super trend value also keeps changing. This green line is what the trailing stop loss is. So as you could see, the moment now currently it is trading around 1000 levels and your super trend indicator value is around 977. So only when it goes below this green line, then you have to exit it. So tomorrow, if again Adani opens a gap up and it keeps moving up, this green line will also keep moving up. It will help you to protect the overall profits. So using super trend gives you the signal at the right time, and also it gives you a signal at the exit at the right time. So now the fourth and final method is the most important one, which is volatility based trailing stop loss methods. So here we are purely focusing on volatility of the markets, and accordingly we are going to trail the stop loss. So let's see how you can use a volatility based indicator and trail your stop loss. So I'm using the same chart of Adani Green here, and to plot the new indicator you just go and look for volatility index. So this is the one, just click on that, and now you just have to change the visibility a bit more so that you can able to see it clearly. So this is the line. So it automatically plots what is the overall volatility of the markets, and based on the ATR, like average true range, it considers okay what is the current average true range and multiplies that with 3 so that you get a much better level, so that it doesn't give you whipsaws very often. So here as you could see, it keeps plotting these levels. So only when it goes below this level, so currently 985 is your new trailing stop loss levels for Adani Green. Only when it goes below this level, you have to exit it. So by using ATR, it calculates what is the overall average true range. It considers that as the overall noise. So only when 3 times of ATR is broken, then we are considering that yes, the market overall trend is changed, and accordingly we are going to exit from the stock. So that is why we are using volatility index as an indicator to see what is the overall volatility in the markets. When one that is breached, we are going to exit it. So these are the multiple trailing stop loss techniques that you can apply with index, you can apply with stocks, so you can apply with any of the instruments that you want, and accordingly that really helps you to protect your overall profits. So in case if you guys have any questions in these explanations, please post it in the comment section. I'll definitely address it. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.